All right. Are you wanting to know what it's like to utilize your VA loan to purchase a home? That's what we're going to be talking about today, and we're getting to it right now. I'm Jacob.
And I'm Clay.
We're the Martin brothers. We're doing these videos every single week about what it's like to live, work, and play in and around Colorado Springs. So be sure to hit that subscribe button and the notifications bell so that you're notified whenever we drop a new video.
Hey guys, we get calls every single day from people just like you wanting to relocate to Colorado Springs and live, work, and play here in the Colorado Springs area. So if that is you, give us a call, text, email, or even come knock on this guy's door, and we'll be more than happy to help you guys in any and every way we can.
So today we're here with Dustin Sidwell of Fairway Mortgage, and he is our go-to lender. He does a ton of VA loans. So we thought, why not have him on video, and he can kind of break down the whole process and explain what the VA loan is all about. So that, you know, if the VA loan makes sense to you, you'll have all the information that you need to move forward. So Dustin, thanks for joining us today on video.
Yeah, pleasure to be on. Thank you guys.
Absolutely, man.
Dustin, do you want to tell people a little bit about yourself, and then we'll jump right into the VA loan?
Yep.
Awesome.
So Dustin Sidwell, producing branch manager for a branch here in Colorado Springs for Fairway Mortgage. And I like what you guys kind of talked about a minute ago, where you were talking about what it's like to live in Colorado Springs. One of the biggest things, a big military presence. We do about 55% of our loans are VA loans, which is very unique. Tells you a little bit about our community. So we have a lot of practice with VA loans. I'm asked all the time, what's the best loan? And I often say, I feel like VA loan is the best option. A lot of big perks to it. The first big thing is the interest rates anywhere from a quarter to maybe a half point better than maybe a conventional loan, jumbo loan. It's a little bit more forgiving with things like credit score. You can have a higher debt to income ratio. It does not require any kind of down payment, and there's no monthly mortgage insurance. So just tons of powerful, great things. So when somebody has an option, every so often there's going to be a chance where it makes more sense to use a conventional loan if you're VA eligible, but not very often.
Okay, awesome. So what does that look like? Like, who is eligible to utilize the VA loan? I know when I was in, like, as soon as I came in the military, they were talking to us about the VA loan and making it very, very well known. But I still run into like active duty military members today that aren't really even sure that they qualify for it.
Yeah, no, it's a good question there. So one of the things that, as far as being eligible, you have to have been in the military and be in the military for a certain amount of time. And we pull a thing called a certificate of eligibility. And that's the thing that's going to tell us, hey, you're eligible. Here's how much you're eligible for. One of the big things that we run into a lot is that, say, the male's in the military and he has a girlfriend and they want to use both of their income. That doesn't work. The only way you can use two incomes, of course, is if they're married. So that's one of the things we run into often. But anybody that's in the military, it's a really simple thing. They reach out to us. We can pull a certificate of eligibility. It's free. And then we can reach out to them and tell them exactly what they're eligible for and kind of go from there.
So a lot of people ask me if we can waive the VA funding fee. Can you tell us a little bit about what the VA funding fee is and how it affects people differently? Because I know some people have a higher funding fee than others and some don't have them at all. Can you just kind of go into some detail about that?
Yeah, that's a really good question. So one of the things that, if there is one, I guess you could call it a negative to a VA fund or the VA loan, it would be the VA funding fee. This is a fee that's charged by the VA, so it's not like Fairway Mortgage or any mortgage company. This is a VA fee, and so what happens is, and it changes. There's a percentage that changes if it's your first time use. Are you doing 100% financing? Are you putting 5%, 10% down? It can change the VA funding fee. One of the things that people see a lot is that they feel like their closing costs might be higher on a VA fund or on a VA loan. And that's just because the VA funding fee gets rolled into your loan. So it's not required to bring any additional money to closing. But there is a chance if somebody has a disability rating, 10% or more, that gets waived. A lot of times when I'm talking to people and saying, hey, do you have a disability rating? And they'll say, oh, I could, but I just haven't gone through the hassle because I'd probably make $150 a month in a disability rating. And I'm like, no, this is worth your time for when you buy a house, because this can save you $10,000 in closing costs. And so it's another good example of maybe starting to talk to somebody 6 months in advance, because the military, it's not always a fast process, but we're like, hey, start the process. It'll be worth your time. There is a way where you can actually get the funding fee waived after the fact. It's a little bit more hoops to jump through and a little bit harder. And what will happen there is you'll get a principal reduction to your loan amount for exactly what you paid for the VA funding fee, but it's much, much easier to just do it up front. So if you're thinking about it and it's something where you're, discharged and out of the military, think you might have a chance to at least have a 10% disability rating, well worth your time.
So when you mentioned getting it waived after the fact, a couple extra hoops and hurdles to jump through, some people that might be watching this think that could apply to them. Who do they reach out to? Is that something that you help them with?
Yeah. So, yep, we would definitely guide them through the process, and it depends like where they're at in the process. Most of the time that I've had this happen for our clients is somebody that's like right in the middle of it. They're halfway done, and so it'd be something, again, I would still recommend to anybody that's thinking about buying a home. I'd rather say, hey, let's jump on this as soon as possible. I wouldn't bank for it after the fact, but there are times where people are like, hey, I've already been granted my disability rating, but it just doesn't show yet on my certificate of eligibility. And so there is some time that we can, get that after the fact.
And can you talk a little bit about like what that looks like in terms of the process, a veteran or active duty service member starting the process to pursue a VA loan?
Yeah, so as far as, it's really, really simple. So somebody that, is interested in getting a VA loan, first step, of course, they're going to reach out to me. And what we're going to do, we're going to be checking 3 things. We're going to be looking at their credit score, their debt to income ratio, and then we're going to be talking about any kind of a down payment, seeing what they qualify for, doing things like ordering a certificate of eligibility, just making sure they are eligible. One thing that often comes up is, can you have more than one home as a veteran? You can. You only have so much eligibility. And so let's say you bought a $350,000 home and didn't put any money down on your first, you were in Georgia at the time, and then moved to Colorado Springs and said, hey, we want to see if we can buy a second home using our VA. Oftentimes you can. You wouldn't be able in that case, most likely, to not put any money down. So you would have to put a small down payment, but in many cases it's still better than maybe what a conventional loan would offer you.
And what is that eligibility? And when you talk about eligibility in this scenario, you're referring to like a dollar amount, right?
Mm-hmm.
That the VA will provide you with a loan when you have multiple properties. What does that cap look like?
Yeah, so actually about a year ago, they made a change to this where you can actually go up, for Fairway's case, we can go all the way up to 1.5 million without any kind of a down payment. So we're looking for more of those $1.5 million borrowers out there on VA loans. But yeah, you wouldn't have to put any money down, which is huge because that wasn't the way it used to be. But then what ended up happening, if you have, like I mentioned before, a $300,000 home that took up part of your eligibility, there's a certain percentage where we can figure out, okay, you have this much eligibility left. And there's kind of some rough numbers. There's a whole calculation to go through, but we can kind of figure it out and then say, you have this much eligibility, and then you would have to pay 25% of the difference of what's left. And a lot of times, like I said, that down payment might be less than what, you would have looked with like a conventional loan or something else.
This comes up all the time. You own a home. You use the VA loan. You own that home. You're PCSing from point A to point B. Is it a one and done type thing, or can you use it more than once? And can you own more than one home at the same time using the VA loan?
Yep. Yeah, so like we were talking about, you can. If you bought, let's say, a $600,000 home in Colorado Springs, and then you got sent to San Diego, California, and you wanted to buy another, most likely your eligibility would all be used up. But again, like I say, I can't tell you how many people are like, well, I've used my VA loan already. Um, what are my options? And it's like, hey, just let us look at it. And a lot of times we are able to show somebody they still are eligible for VA. Another thing that we sometimes see people do, especially in the market that we're in right now, is they say, okay, I have my VA loan. I got a ton of equity in it just because the market's done really well in Colorado Springs. I'm going to refinance it to a conventional loan, free up my eligibility. So then when I go buy another home, I don't have to put any money down, be able to get that aggressive interest rate because I have so much equity in this home here. I won't be paying the mortgage insurance that is often associated with a conventional loan just because I have over 20% equity.
How does that work with a lot of people maybe have heard the term like refi out of a VA to a conventional?
Mhm.
Does that cost an arm and a leg, or is the process pretty easy? Is it affordable? Why does that make sense, and what are the costs involved?
Yeah, another good question. I think one of the things is it's just a normal refinance, normal process. So the costs are going to vary a little bit, depending on the process. But the one reason that somebody should look into doing something like that, in my opinion, a lot of times what holds people back in buying a home is going to be the down payment. They qualify debt to income ratio, and that's what makes that VA loan so powerful is, let's say you're moving to, like we said, San Diego, California, and you're going from a $300,000 home here in Colorado Springs to a $600,000 home. All of a sudden that down payment's a bigger deal, especially if you're not selling your home. And what it does is give you an opportunity to get back into a market, not put any money down, get an aggressive interest rate like you would with a VA loan. And so it is a perk. You can do that one time. There's a one-time restoration, where you take it from your VA loan, free it up, go to a conventional loan. So, and we're doing a lot of those things right now, just kind of getting people prepared for that next, move, whenever it may be. Sometimes even in Colorado Springs, they're moving from a home, kind of a starter home and wanting a bigger home. And they want to continue to take advantage of rent opportunities, but want to make sure that they're eligible to be able to buy that new home when it comes without having to sell the home they're in now.
Okay.
Yeah, absolutely. Because especially being here and all the equity people have gained over the last couple of years, it totally makes sense. I know for me, when I was 23, newly married, we were looking at buying or renting an apartment. And for whatever reason, I just thought that home ownership wasn't a possibility yet. And for whatever reason, I started looking into home ownership and saw that it was doable. Like we had no money in savings. We had to borrow the earnest money from my mother-in-law at the time, right? And be able to pay her back after we'd closed. But we were able to access and get into our very first property at 23 years old, no money down in terms of a down payment. And it worked out really, really well for us. And it all started with contacting a lender and a real estate agent to kind of show me the way because I was completely clueless, other than the fact that the VA was an option.
Well, and a couple of things that I'll say on that. I mean, I think the VA does a great job of allowing, people to get into home ownership. And you think about it, there's lots of ways to create generational wealth, but I think one of the best is owning real estate. You look over the last 5 years in Colorado Springs and just that opportunity where we've seen some big gains. They're predicting, 3% appreciation to continue forward, and you're getting a tax write-off in some cases, and you're living in a home that's yours and can make your own. And like we talked about with VA, being able to get into a home with no money down, and it tends to be somebody that, first time home buyer that maybe doesn't have a ton of money saved up, and their debt to income ratio is maybe a little higher, and their credit score maybe just kind of getting started. It really does allow them to jump into that at an earlier age, start taking advantage of those appreciation, in the years and years, and they're paying into their equity as well, as opposed to, I just saw something the other day where they said, let's say interest rates, if they go up, that'd be really expensive. And what really is expensive is continuing to rent. It's that's super expensive. So again, VA loan, best loan I know of. I really, especially if a disability rating, there'd be no reason not to look into it for sure.
Yeah, and if you're active duty, you get to take that tax-free housing allowance and put it towards paying off your house, you know? So it's pretty incredible, like the opportunity that these folks have. And I don't know, more people need to be on it.
So this one comes up a lot too. Investment. Everybody wants to be an investor. Everybody wants to buy an investment property. I get it, but how can you, or can you at all, use the VA loan to buy an investment property?
Unfortunately, you can't. So the VA, of course, with the perks that it's giving, only wants that to be an owner-occupied type setting. It does happen, like, you know, you can have a rental with deemed an investment property, but what has to happen, you move into it, you live there for a couple of years, you can move out, keep that home, keep it as a rental, but you can't buy in as an investment property and get into that, nor can you do a second home that way. So those are going to be conventional loans. You know, you are going to be putting, you know, anywhere from 15% up, you know, most likely 20-25% down if you can. So again, like I talked about before, I think one of the things that holds more people back from home ownership is that down payment.
Yeah.
And you know, investment properties. I mean, everybody wants to jump into that, but that's, you know, the biggest hurdle. But
So let's
jumping
talk
in,
about,
creating the equity and getting in quickly is definitely one of the perks.
absolutely. So you can't purchase a property with the VA loan with the intention of it being an investment property immediately. But
Right.
like, how about like a house hacking opportunity, right? Or an individual identifies like a duplex, triplex, fourplex, something along those lines, with the intention of or intention of living in one of the units. Can you kind of go into detail about that and how that could be applied towards not only facilitating your own owner-occupied situation, but also generating some income from those other units?
Yeah. So again, I've seen this happen. I had a guy that reached out to me, and you know, he's probably the guy I think of the most when I think of these kind, you know, house hacking and this kind of thing. So of course, I get a bunch of these calls every year, but this guy called me and said, "Hey, I am wanting to get into investments," you know, and I hear that a lot. And then of course, I asked him how much money he had down. He didn't really have anything in his bank account, and you know, his job salary kind of maybe on the lower end, kind of living paycheck to paycheck, but had read some books on investing and was really into it. And so, of course, I said, okay, well, let's see about getting you in. So we got him in, no money down on the first home, and did exactly what you're talking about. He actually rented his basement out, just trying to create extra cash flow. And then about 2 years later, he called me up again and he said, okay, I'm now ready to see about buying another home. And so again, then he moved out. We did a 3% down on this one. He had a little bit of down payment. And now all of a sudden he's cash flowing on the first one. He did the same thing. What does he do? He brings somebody in the basement, help him build the cash flow on the second house. And he's up to about his sixth house. I've worked with him for about 10 years, and he's just slowly been kind of building that way. So again, I mean, house hacking makes a ton of sense, because what does it do? It skips that larger down payment. When you do move into a home, though, you are saying that you're going to live there for at least, you know, 12 months. Things happen, but that's, again, your intention is that you're going to be living there for at least that amount of time. But
Okay.
the goal, of course, getting in with the lower down payment and being eligible for a home down the road makes a ton of sense.
Awesome. So even though the VA loan is not designed for purchasing investment properties, an individual absolutely could, you know, seek out a particular property that could be utilized as an investment property while they are living there to, you know, increase that monthly cash flow and possibly build equity in the property long term.
Yep, and that's kind of like what we were talking about earlier. Someone could buy a home, a starter home, and then, you know, maybe they could, you know, buy that second home still using their VA, put a little bit down on the second one. Now they've used up their eligibility, but hopefully by this point they build up some equity, and yeah, they're under their third, fourth, fifth home, and the first couple might have started out with the VA loan.
Awesome.
Yeah, it's pretty wild.
Yeah, it's pretty powerful, especially like I start thinking back to when I was younger And, you know, like say, I think we bought our house was $100,000, you know, it was right after the crash. But where we were, real estate was very affordable. So it totally would have been feasible for the two of us to, you know, buy a fourplex, right? And live in one unit, rent out the other 3 units. And I look back on that and I realize how much further ahead we might have been had we kind of gone down that route and started getting serious about real estate and the power of real estate, especially considering I had a W-2 job. You know, when you're in the military, it's pretty safe income, meaning, you know, chances are you're not going to get fired. If you do, you're really messing up. But it's just perfect for these folks that are planning on doing, you know, 20 years or more. They've got that steady income coming in. They're rotating their PCS into different areas. Like the opportunity to pick up these properties and do so with very little money out of pocket is a really great deal.
I think you bring up one other thing, and I see this a lot where, you know, husband, wife, let's say both of them are in the military. I mean, that opens up another opportunity where each of them have eligibility.
Mhm.
And you know, so that can just keep going. Sometimes, okay, we use the husbands on the first, you know, house, one or two that they bought, and all of a sudden wife, you know, she's eligible for, you know, house 3 or on. So definitely a lot of opportunities. And we see that quite a bit actually, where, yeah, both of them have eligibility.
Jacob mentioned something. I want to use this scenario real quick, just because different markets have different price points and so on. Jacob said that his first home using a VA loan was $100,000. I guess two-part question. People mentioned the VA loan limit. Uh, what is that currently today? And that does change. And two, if you own $100,000 home in a much lower price market, again, you mentioned that you can utilize the remaining balance, but let's say you keep that house, you rent it out, you move to another market like Colorado Springs, it's much more expensive than, you know, Mississippi. Can you kind of explain how much is remaining on that VA loan limit and what that is and how it changes?
Yeah. So, you know, so generally right now, I guess you could say the county loan limit for El Paso County is 548,250. But they made some changes to where if you don't have a VA loan, they've opened it up to where it's much higher. It's like 1.5 million.
Okay.
And so when the county loan limit comes in is when you already own another home. And that's when it's going to kind of be impacted. And you're right, every county is different. So, you know, we talk about, let's say you started in Mississippi and then you moved to Colorado Springs, the home, you may be the similar home, but it's going to be a lot more expensive here in Colorado Springs. So the county loan limit is a lot higher to compensate for that. But if you move from here to somewhere, I don't know, either on the west or the east coast where maybe the cost of living is much higher, again, that county loan limit adjusts at the same time.
Okay. Can you think of anything else that you'd want to share about the VA that's, you know, commonly asked question or whatnot before we wrap it up?
I just want to reiterate that, you know, like I said before, that I think it's the best loan there is. I think it just gives you so much flexibility. You know, somebody on a conventional loan that maybe has kind of starter credit, so it's not stellar. Their debt to income ratios are pretty high. They're doing down payment assistance. I mean, just when you look at the difference of the two options, it's substantial. I mean, it's hundreds of dollars less a month in payment. And you'd be eligible to purchase much more. So again, if anybody out there has questions, more than happy to just answer them, go through it, explain the process. Again, there's so many different scenarios, but I just think it's a powerful loan and want to make sure that people are aware of it and taking advantage of it.
Cool. Dustin, what's the best way to get a hold of you? And again, whatever you say now, we'll make sure that we attach it somewhere in the description below.
Yeah, perfect. I give people my cell phone. I want them to get directly in touch with me. So it's 719-321-7928, 719-321-7928. And then you can call or text that number. And then of course, email works, dustin.sidwell@fairwaymc.com. So.
And guys, we'll have that in the description. So if you do want more information, you know, if you're filling out, definitely give Dustin a call. He will put you on the right track. We utilize Dustin personally. We also refer him out to our clients. So we trust in him and we know that he does great work.
Awesome. Appreciate you guys. Appreciate the trust and the opportunity to jump on this call with you.
Yeah, thank you, buddy.
Justin, thank you so much for coming on. And you gonna close it out?
Yeah, be sure to hit that subscribe button and the notifications bell so you're notified whenever we drop a new video. And if there's any videos, any topics that you want us to do in the future, hit us up in the comments, let us know, and we'll definitely get to it.
That's all things VA, guys. Reach out if you have any questions.
Thanks.
Bye.
Bye.